Ladies and gentlemen, good day and welcome to GHCL Textiles Ltd Q1 FY25 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Devanshi Dave from Go India Advisor. Thank you and go.
Thank you, Aditya. Good afternoon and a warm welcome to everyone attending the GHCL Textiles Ltd Q1 FY25 earnings conference call. We have with us on the call today Mr. R.S. Jalan, Non-Executive Director, Mr. Raman Chopra, Non-Executive Director, and Mr. Manu Jain, General Manager, Investor Relations and Finance. Please note that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. I shall now hand over the call to Mr. Jalan for his opening remarks. Thank you and over to you, sir.
Thank you very much. Good afternoon, everyone. We are pleased to welcome you on our Q1 FY25 earnings Concall. Our investors' presentation has been uploaded on the stock exchanges, and we trust you have had the chance to review it. Notably, this quarter marks the 1 year of our listing, a significant milestone that underscores our journey since the demerger. With this, I would like to reaffirm our commitment to sustainable and inclusive growth of our business and value creation for our stakeholders. GHCL Textiles has established itself as a premier yarn manufacturer known for exceptional quality. Our diverse product portfolio of various synthetic and cotton blends ranging from 24 to 120 count cater to the specific needs of our strategic customers. Our journey of gradually shifting from commodity yarn to the value-added yarn is highly satisfactory. We have recently begun to venture into fabric segment through our outsourcing model. Reflecting on our financial performance during Q1 FY25, our plant utilization was at 98% plus for the quarter, along with a higher production of finer count. Our revenue increased by 9% on year-on-year, reaching to a 289 crore. EBITDA margin came in at 10.1%, resulting into an EBITDA of rupees 29 crore as compared to Indian rupees 18 crore during Q1 of last year. Balance sheet remains strong with a surplus net cash of rupees 5 crore. The Indian textile industry has been facing demand headwinds for some time with a mixed demand sentiment. Cotton prices had earlier corrected in both domestic and global markets, but now largely stable. Several exporters from Bangladesh are facing significant challenges, leading to the declining exports. While this presents an opportunity for the Indian textile industry, it will face challenges due to capacity limitations. While this is a general belief that the sector is poised for a recovery, the exact timing of this recovery remains uncertain in near term. However, despite the industry challenges, we believe we have consistently delivered to our operational excellence and connect with the customers. Our commitment to expansion remains firm. Overall, we have outlined rupees 1,000 crores of investment, of which 350 crore has already been deployed a year back. We are on track for another 25,000 spindle expansion, which will get completed by May 25. We will generate an incremental revenue of around 250 crores. We aim to expand our existing 62 megawatt green energy portfolio such that the share of our green power is increased from 72% to 85%, thus providing long-term cost benefit and fulfill sustainability aspects. Additionally, we plan to invest further in setting up capacity by knitting, weaving, and dyed fabric production. We want to cater ready-to-cut fabric to our end customers. Our balance sheet is strong without significant leverage on books, which offers us ample room for growth. In conclusion, we are confident in our ability to navigate the evolving market landscape. We remain focused on investing in emerging opportunities within the Indian textile sector. Our aim is to double the revenue within next 3 to 5 years, maintaining an average EBITDA margin of 70 to 20% on the long run, supported by our value-added products and lean cost structure. We are poised to drive continued success, enhance our competitive position, and deliver value to our stakeholders. Thank you for your continued support and confidence in our company. We now welcome any questions you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Ayush from Service Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir.
Yeah, yes. I just have one question. Could you just give some color on the cotton and yarn spread as the current, last quarter and the current month of July, just to give us an idea of what the spread is currently?
Ayush, your voice is not very clear here. Can you, I don't know, your voice is not, I'm not being able to understand the question.
Is it audible now?
Yeah, much better.
Yeah. So I just wanted to understand the spread between cotton and yarn. The last quarter and the month of July, could you just highlight or give us some color as to what it would be currently?
1 second, huh? At this point of time, I don't have a readily number of the spread, because normally, as a practice in our review process or our what you call control mechanism, our concept is more on value addition. But broadly, my team is telling me that my spread is around 122 in this quarter, in FY25 Q1. Okay. July at this point of the time will be difficult to tell you the number. And this number in the same quarter last year was, or say, I would say that if you look at was 96 rupees in Q1 FY24.
All right. Understood. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Jatin from Swan Investments. Please go ahead.
Thank you, sir, for the opportunity. Sir, carry on to the first participant questions. Now, as you indicated that the spreads in the first quarter was 122, and which has gone up significantly when you compare it to the last quarter. But when it comes to our margins were largely flat. So, did we have any one-off expenses in terms of other expenses or employee or some sorts which had taken a benefit of the overall increase in the spreads?
See, you are comparing, I think I have compared between Q1 FY24 versus Q1 FY25. Okay? In Q1 FY24, my EBITDA margin was 6.7%, and in this quarter it is 10.1%. The number which I told you, 96 and 122, is based on that.
However, I totally agree. I totally agree that the number which you indicated is on the corresponding period last year. But in the last call, when we indicated the spreads of near about 110 and current spreads of 122, so there is almost 8 to 10% jump in the spreads on a sequential basis. So just wanted to understand that when there is a jump in the spreads on the sequential basis, there is no improvement in the margins. So what was the reason behind that?
You see, again, let me be very honest on this thing. Our control mechanism is not on the basis of the spread. Because you see, it depends on the number, the tonnage which you produce, right? If your tonnage is basically because of your fine count and the coarser count, your tonnage changes. That gives a different, spread. I'm just giving an example. Suppose last year you produced, say, 30,000 tons. I'm just arguing, say, 30,000 tons. In this quarter, you produce only 28,000 tons. So your utilization is 98%, 99%. But because of the final count, your volume had gone down. In that, spread will be different.
No, but sir, no, sir, I totally understand when you said that on the tonnage-wise, your spreads will be different. But definitely, if you're on the revenue on the sequential basis, it largely remains same when it was 95% utilization in Q4, and currently we are at 98%. So either there is a mismatch in terms of our understanding in terms of the numbers that you have provided, or probably increase in the spreads.
No, I don't think your understanding is wrong. Let me clarify this point very clearly.
Yeah, but
talking. Sorry, let me complete then.
Hello.
If you are comparing with a sequential basis, if you are comparing from the sequential basis, okay, my margin remains almost, EBITDA margin remains the same. So last quarter, means Q4 FY24, my margin was 10.3%, and my margin now is 10.1%, like you rightly said. My even revenue remains the same, 288 against this quarter is 289. So that way, we are on the same page. We are same level what we have been in the March 24. Now you can ask me that.
Yeah, so that's precisely I was asking. With the improvement in the spread, the numbers would have looked much more better as compared to the last quarter. But
I think I'm not able to explain to you. I've told you just now that in the last quarter, our volume could have been higher because we don't monitor on the basis of a value, on a spread basis. So on the basis of the volume, our number of spread can be different in the different quarters, but the real number to compare, I'll give you the number that also is there. In Q4 FY24, my spread was 126 versus, no, I'm talking about 126, and now it is 122. Okay. So, but you can't compare on that because of the volume disparity. So therefore, for you, the right number of my comparison, at least for my mill, the right comparison is the EBITDA margin and the revenue.
Sure, sir. And so second, when you indicated now we are doing 1,000 crores of investment, of which 350 crores we deployed, and we commissioned our 40,000 spindles, we will be commissioning near about another 25,000 spindles, where we will be spending 250 crores. So that gives me a total contribution of around 600 crores of the capex. The remaining 400 crores of the investment, where are we making it?
Yeah, as I said, three things we have said in my opening remarks. Weaving and knitting is the second growth or the value addition which we are envisaging. And after that, the processing plant to make the dyed fabric ready to cut to be supplying to the end consumer. End consumer is the wrong word I would say, the garment manufacturers. So that's the journey which we have. We have submitted this plan to the government of Tamil Nadu. Based on that, we have got an incentive approval also from the government. And next 3 years, we are going to complete this journey of 1,000 crore investment.
And sir, given the current run rate and 288 crores that we did in the last quarter, how do we see the revenue growth for FY25? Because the benefit of the 40,000 spindles should also flow in. So where do we see a revenue growth for FY25 when you compare to previous year?
Yeah, you will get a revenue growth of around 15 to 20% growth during this year because of the utilization 40,000 spindle. Full benefits will be coming in this year.
Sure, sir. That's all from my side. I'll come back in the queue. Thank you.
Thanks.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Hemant Soni, an individual investor. Please go ahead.
Sir, thank you for providing me the opportunity. I just wanted to know one thing, like as you just mentioned that we are targeting a growth of 15 to 20% in this financial year, but we are currently running at 98% capacity utilization, right? So just, and the 25,000 spindle will come in FY26. So what will be the growth drivers? I mean, what will be the reasons behind the 20% kind of growth in FY25?
Like just now I said that if you look at that, even in this quarter, our total top line was 289 crores, right? if you multiply that itself in the 4 times, that number of 20% growth you will be getting it. Because I'm comparing this growth of 20% from the last year. Last year, my top line was around 1,000 crores, and this year the likely number will be roughly around 1150 to 1,200 kind of a number. This is getting translated into current turnover multiplied by 4.
So, is it fair to assume that there will not be a quarter-on-quarter growth?
The quarter-on-quarter growth will come only once this new 25,000 spindle will come in next year, number one. Number two, suppose tomorrow the top line, the yarn prices goes up, the revenue will go up, but not in terms of the volume growth, because we are not adding any capacity, new capacity is getting commissioned this year.
Sir, are we kind of reducing our growth target? Because I had a look at the previous Concall snippet and we were targeting around 20 to 30% kind of growth in FY25. Now you are saying 15 to 20%.
No, I've given you just now the numbers. I told you that last year my top line was 1,000 crores, and this number of this year looks to be around 1,200 crores. So that comes to around 20%, right? So I have given a number of 15 to 20%. The range I have given the 15 to 20%. I'm not reducing our target. And all this revenue always depends on the per kilo of yarn prices. Suppose tomorrow the yarn prices goes up by 5%, automatically the revenue will go up by 5%.
So, sir, what is your outlook on the yarn prices?
Right now we are looking at these prices are more like a stable prices. We are not looking at a very significant jump out of these prices from here onwards. At least in the short term. We don't know in the long term what happens.
Okay, sir. Thank you. Thanks a lot.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Amit Ketan from Liberum Capital. Please go ahead.
Hi, thank you for taking my question. So Jalanji, if I just look at the gross margin quarter on quarter from Q4 to Q1, right? We've not seen a lot of improvement, whereas we would have bought fresh cotton inventory, say from September, October onwards for the new season. So shouldn't there be an improvement in the gross margins, or were we working with slightly older inventory, higher priced inventory? Because some of our peers have reported, some improvement in gross margins, which we are not able to see in our numbers.
No, Amit, you are 100% right on this. And let me tell you 2 things. One, definitely the inventory, the way the inventory has been kind of a panned out for us. Because some of the imported cotton inventory, which we covered long time back, that had some implications on our overall costing stage. And the new inventory is also coming in. But the domestic cotton, definitely the new inventory has come in. The second is in the spinning, as you rightly said, some of the peers has kind of shown an improvement, which we have not been able to demonstrate during this quarter. But I would request that we have to look at more slightly for the longer term perspective. As you know that our longer term perspective, the way we have delivered a return in the last many years, and I'm sure that in a reasonable time we will be coming back to those situations because the market will also improve, and some of the areas where we need to work on that, we are working on that, and definitely you'll find that improvement.
Got it. And my second question would be, could you throw some, give some color on what's happening on the demand situation both in US and Europe? Has there been an improvement from say what was happening in the last quarter, or does the situation remain the same?
See, Amit, at this point of time, if you ask me my view about the overall on the textile industry, I would say that at this point of time, I'm not very bullish on the textile per se as a sector. And I have a reason to say that. Maybe I may be completely wrong. Number one, like in my opening statement, I said Bangladesh. There's a huge opportunity from Bangladesh because of the dissonance in Bangladesh for a value-added segment like your garments and mainly for the garments. But India has a constraint of the capacity. These opportunities are going into Vietnam and other parts of the world. Okay. Cambodia. Okay. That is number one. Second, because of this Bangladesh disturbance, even the spinning side, some of the exports which were happening to Bangladesh is also getting disturbed. Okay. So far as the Europe and US is concerned, I'm not seeing a very big surge into their demand. Of course, destocking of the inventory. But now the trend, Amitji, has come is the retailers don't want to have a long-term inventory. They want a shorter delivery, shorter time delivery, less inventories and things like that, because they have burned their finger in the past. So frankly speaking, in a maybe short term, I don't see any major upside into either in overall as an outlook on the textile. And this is what my personal view is.
Got it. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Falguni Datta from Mansarovar Financials. Please go ahead.
Yeah, good afternoon, sir. So can you just share the production and sales volume in tons for the quarter?
You see, basically we never share the numbers in tonnage. Okay, we only share the water revenue. But I have told you that the number will change because of the tonnage and things like that. Product mix are different, count range are different, because I said in my opening remarks also 24 to 120. So that correlation between quarter to quarter on the volume terms is not something which is going to be meaningful for us. We look at the revenue, we look at the utilization. Like I said in my opening remarks, my utilization is 98% plus. We monitor on those things.
If you can just tell me for the year will do. I mean, just to get an idea. I mean, last year also will do. How much was it for the full year? Hello?
Sorry. What I'm saying is just wait for a second. I'll just give you.
Yeah.
Last year, roughly, I'll give you around my top, tonnage was around 33,000 tons.
33,000 tons for the full year?
For the full year. Which was 28,000 tons in 23.
Okay. Thank you, sir. And this was, you were saying this was what capacity utilization, this 33,000 tons?
Broadly, our utilizations are between 98 to 99% capacity.
Okay. And sir, can you say that, just if you can share that this 33,000 tons, how much will it get to post all your expansion is completed?
Sorry, can you repeat?
Post the completion of your expansion in spindle capacity, this 33,000 tons gets to what number?
Like I said, this is very difficult because I told you that depending upon what count we make.
Okay.
And but broadly, I will tell you 33 plus, we are talking about something around 21 tons per day. Just calculate that. And just leave it with the number. Don't hold me responsible for this number because depending on the fine count, depending upon the many things.
Yeah, sir, that's okay.
Around 7,500 will get. That means this will become roughly 40,000 tons. After this 25,000 expansion, 25,000 expansion which is completing next year, my volume will go up to, as I said, 40,000 tons.
And just to come back on this, you said 21 tons. What's the number? 21 tons per frame, you said, is it?
Don't take this number. This is for my calculation purpose.
No, this is just for our understanding. So how should we calculate it for our understanding? So you said 21 tons per?
We monitor that number on the daily basis. That's 21 tons per day production. That is what the target for the new 25,000 spindle which we are adding. So I have multiplied by 360.
Okay, fine, sir. Thank you. That's all from my side. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Sachdev from Albatross Capital. Please go ahead.
Yeah. Hi, good afternoon, Mr. Jalan and the team. Just a quick question. Could you elaborate a bit on the strategy on the yarn side? On the fabric side.
No, can you repeat the question? I'm not hearing you properly.
Can you hear me now?
Yeah, better. Tell me.
Could you elaborate a bit on the strategy on the fabric front, the model and, the kind of potential you see there?
Yeah, good question. I would say that. See, Mr. Sadev, like you know, for this mill or this company, of course, it was a part of the GHCL. We had been in the yarn for a long period of time, and I think reasonably we have done on that score. Now, our thought process is that we have to go into the value chain in a gradual manner. The first target which we have in our mind is to go from here to knitting and weaving, which we have already started our journey a year back by the outsourcing model. So that to understand the market, to see the marketing, to understand the customer, to understand the requirements and things like that. We are in that process. Once we complete this 25,000 spindle, in this spindle itself, we are creating an infrastructure which we will be adding the machine next year of knitting machines. So we have a plan to go for the knitting machine or knitting segment, and we have a plan to go for the weaving side also. And broadly, our thought process is approximately around 40% of our volume should gradually move towards this segment. And the last but not the least, we have already applied for a land in this zone which is PM Mitra Park, which is getting into Tamil Nadu, to go into the processing and making the processed fabric ready to cut stitch. And all this plan we have in next 3 to 5 years to complete. And we have a plan that this top line going from this 1,400 and 1,500 crores, because this year is around 1,200 crores, next year it should be roughly around 1,400 to 1,450 crores after this 25,000 spindle. Broadly, I'm giving you a number on an annual basis. Because next year this number will come in only in the month of June, so proportionately the number will be less in 25-26. And after that, our growth plan is more towards the knitting and weaving and processing. My estimation is next 3 years that should happen. So after this, probably we will be in double than the turnover what we have right now. Means we will achieve in 24-25. So that is where the plan is going forward.
So if I'm correct, this business would be a high ROC business than the traditional yarn business?
See, long run, again, in this business, I want to be very clear, which I have been talking on my every call. In a longer terms, my margin on the spinning has been around on a range of around 14 to 15%, based on the initiative which we have taken. One is that moving from a commodity to the value-added segment, plus our footprint on the green energy, along with this value addition. Our target is around 18 to 20% kind of a margin should be the number. Obviously, this number of incremental will come also because of this knitting, weaving and the processing part of it. The overall margin should be around 18 to 20%.
Okay, thank you and all the best.
Thank you, Mr. Dev.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, sir. Thank you for this opportunity. Sir, you mentioned 1,000 crore rupees capex, sir. If you could just give the breakup for this financial year and how will we sum up to the 1,000 crore?
See, Saketji, like I've just said in my opening statement, 350 crores we have already spent last year itself in our 40,000 spindles. Balance remains 650 crores. Out of that, roughly around 220 or 210 crores is already under implementation. That will get completed by June 25. Right? The balance amount will be on the knitting and weaving and the made-up also your cut and sew, the ready-to-cut process fabric project. The balance amount will get invested there. out of this total number, one additional, one reduction